Hello, everybody. Welcome to this webinar, and we will be getting started in a few minutes. Let's just allow some minutes for everybody to attend. Um, First of all, let me share my screen for you so we can have a quick chat of analysis on the S&P 500, looking about what happened today. And that's always a good chance to have a quick recap of what has been going on for the day during the session, and also a quick recap on all of the volume and order flow elements that have been evolving throughout the day. Basically, how you can see here from my screen, we have had a session, basically a rotational session. As you can see, we had the cash session opening, going from this area, this technical area of 4,400 even, and started to push to the downside on the RTH opening session. And after that, we had a strong move to the downside, actually expressing very kind of a strength to the downside. And we can also have a look at that, at confirmation of that from the CVD, as we were talking about last time. Cumulative volume delta is giving us a very nice confirmation of what the price move to downside was. As you can see, we have a perfect convergence from price, comparing price to CVD. And so far, we are going rotational around this area of 4,370 and 60, which is accompanied, of course, by what? By a nice distribution phase expressed by a bell distribution curve from the volume profile. And this is also confirmed by those two structural levels, which you can see here, for 43.71 and 43.46 around, which those levels come from the market profile analysis. You remember a couple webinars ago we have talked about how we can use TPO profiles, also known as market profile charts, to determine where we had a previous established balance. And this is actually exactly what those levels are here for. Since whilst price was coming down, we had this area given from a previous value area, from a previous session of market profile, which I'm going to show you immediately. That's the one. As you can see, that's the very same area that's highlighted on the other chart by this orange rectangle that expresses a previous area where we had established balance. That means previous established acceptance of price. And as you can see, as price came and started to build some acceptance below this upper edge of this value area, basically it did confirm that price was willing to actually find acceptance, also from today's session's perspective, below this area. And apparently that's what the volume profile, the developing volume profile of the session, of the current session, is telling us, that actually this is the range, the dealing range where price is at the moment finding acceptance. That means that so far we have a value and development of value going on with this area, roughly this area as premium area of prices. This area expresses discounted prices, and in the middle, roughly in the middle, we have high volume nodes giving us what the fair value of this specific and partial air distribution area is. So everything is in accordance with all of the topics we have been talking about over the last webinars. Now, today, I hope this quick analysis, even if I'm aware that's not 100% complete, but I just don't want to talking too much about these structural and technical features. Today's topics is about the order flow events. So basically, last time we have talked about delta, why delta give us important information about how strong or how weak price gets into important levels. Today we are gonna go even deeper into that, talking about what order flow events are and how we can recognize it from different perspective using different order flow tools. I am sure many of you might already have heard about absorption or exhaustion. We only introduced that quite quickly last time. Absorption and exhaustion are basically the most important, the most common order flow events, and actually the explanation of why price strongly reacts on specific level and sometimes also may make sharp turns on specific level, because probably there have been absorption or exhaustion taking place. Just to keep the things simple, I would say absorption and exhaustion, those are both order flow events likely to lead to a price turn. So if we are watching the price rising maybe to a specific inflection point that we have identified before, if we spot, for example, absorption taking place on that level, what we want to do is assessing the quality of this absorption in order to detect how good the chances are for the price to actually bounce off that level and give us what it can be a trading opportunity. So we could say that absorption is more likely to be seen, it is easier actually to be seen as a reversal order flow event, because it can actually detect a bounce of a level, of a specific level. Why does absorption happen, and how we can detect it from the order flow? Well, first of all, absorption, we can see absorption as the word would suggest. We have absorption when we have basically a strong effort on a level. So let's assume this is an inflection point, which it is recommended, which it could be maybe a level detected from the market profile analysis, or maybe it's just the high boundary of the value area of the daily volume profile. It could be a VWAP, standard deviation, it can be the VWAP, or it can be one of these levels that we can see here, which actually show absorption and exhaustion. I'll go into that in a little while. But an inflection point determining as coming with a structural meaning. Okay, so a level where we want actually to see what happens once price reaches that level. Okay, so we have price reaching that level. And what happens normally if we are following an upswing? We are likely to see pressure to the upside being dominant. Okay, so we are likely to see within this swing lots of positive delta being in play. Positive delta would slowly, tick by tick, drive price higher. Okay, at a certain stage, it happens quite often that we see this pressure to the upside given by an increasing delta getting even stronger. Okay, so we can see maybe cumulative delta, as we were saying last time, making nice peaks like this one, or we can just see lots of volume coming in the buying side. But apparently price starts to show an anomaly. Which kind of anomaly? Price just doesn't move too much, or at least price moves differently by what it used to be whilst price was traveling towards that level. My drawing is not that nice, I'm perfectly aware, but what does it want to show? That in this phase, as price is going up, is rising and is traveling quite well with not that much of volume, let's say an average amount of volume. Okay, once we reach the important level, volume becomes high. Okay, we have a higher amount of both overall volume traded, so we are likely to see also in the volume profile, if we have maybe a high volume node here, we can see that this high volume node starts to become sharper. So we have situations like this showing always more volume being traded in the area. But also, if we are using a tool showing the delta within that specific area, we can see that there's not simply an high volume being traded, but there is a high, an important, a relevant dominance of positive delta pushing into that level. But despite that, price is not moving accordingly to that energy. Because if we compare this situation to the previous situation where price was moving with just an average volume, the first question we should ask ourselves is, how is it possible that such a volume and such a delta, such a strong delta, isn't able to move price higher, or at least move price stronger than it used to be in the previous area that the price has gone through, where it was having a nice result with a lower volume. Do you remember the relationship effort versus result? That's one of the first principles we have talked about at the beginning of these webinars. This is exactly what happens where we have an absorption. Absorption is basically a strong energy being put in the market, but which is not able to push price higher according to how we should be compared to the strength of the volume and the strength of the delta being involved in that effort. Good. But which kind of implications we can understand from this specific behavior of price, volume, and delta? Well, basically, if we have lots of volume trying to break this level, and also we have a nice amount of positive delta aiming to break this level, the only reason why the level does still holds is because if there are so many people buying, there had to be some sellers somewhere acting as counterpart of all of those buyers. And if you think about that, that strongly makes sense. Because first of all, we wouldn't be able to have all of these buyers transacting aggressively if we didn't have sellers being their counterpart. How would it possible for them to buy without any seller being there? Okay, so this is the first reason, because that makes sense. If we didn't have all of these sellers selling what those people here are buying, we would have had a situation like this, where there are an average amount of volume and an average amount of buyers, not extreme ones, but on average, let's say. Price moves just because there are not so many sellers being there and acting as counterpart. That means that there are a few buyers being active, but they are, since there are not so many sellers being there making available huge irrelevant quantities to be bought because they are selling, buyers, if they are really convicted to buy, they will have to find sellers at more expensive prices. That's still the very same principle of the auction market theory. If we don't have liquidity on a specific level, we will have to look for liquidity. That means if most of the people are buying, they need sellers. If there are any seller or enough sellers here, we will have to look for seller at more expensive prices. If you think about that, that's the very same thing happening when, for example, there is a lack of specific goods. Okay, so for example, last year there were some issues, of course, in the supermarkets of oil in February 2022 because of the first time of the war in Ukraine starting. There were somehow a lack of oil, and of course there were less quantity available. That can easily lead price to increase because there are less quantity available. Since there are less quantity available, there are more people willing to buy, and also willing to eventually pay higher prices for that good. They are just looking for liquidity, for a liquidity which isn't enough there at the moment they are deciding to buy. So that's the very same exact process. So back to the absorption. What happens where volume increases and actually buyers being strongly convicted about their actions have found sellers, all of the sellers they need. They start interacting each other. So there is no need anymore here to keep on being aggressive and looking for further liquidity at more expensive prices, because we have sellers here. And on the other hand, those sellers actually, by selling what aggressive traders are buying, are literally absorbing all of that buying power. That leads, of course, to a high amount of volume being transacted and a high volume of a high amount of delta being spent right here. Okay, but price doesn't move just because here buyers and sellers are having a fight. The only difference between these two counterparts is that normally one counterpart, in this case buyers, are aggressive traders, and the counterpart is given by passive traders. You surely remember what we said when talking about the market microstructure. When we have buyers being very aggressive, that means they are lifting the offer on the order book. They can be executed only against passive sellers being on the offer side of the order book. Passive sellers. So this is exactly how the interaction works when we have an absorption. Literally, after all of this explanation, which I hope it was clear enough, when do we have an absorption? Well, when we have a fight between buyers and sellers, let me just clear this drawing. So yeah, inflection point was here. Okay. When we have a fight between buyers and sellers, aggressive versus passive counterpart, and of course, whilst the battle is still in play, in this case we have passive sellers and aggressive buyers, as price still transacts here, can we really determine who is the winner and who failed this battle? Well, not really, not really, because we still have aggressive buyers trying to push price higher and passive sellers trying to hold actually price. So yeah, we can say in this case that price is being absorbed. Buyers are being absorbed by passive sellers, but they haven't actually been absorbed. That's still a dynamic developing. Okay, when can we really say that maybe sellers have won the battle? When we have sellers switching from being passive to being aggressive, and that normally leads to price reverting. So at this stage, we will likely see the counter move, okay, the counter aggression, if we compare that to the previous aggression we had to the upside. That's only from here on we can say, if we want to categorize even better absorption, that's only from here on we can say, okay, buyers have been absorbed. Therefore, on the inflection point I was looking at, I was watching, or the order flow event of absorption has actually validated my analysis to be done on that inflection point. Then there are different ways we can use that, but let me just make the opposite example, which, well, is not really the opposite example, but that's another variation which may occur when we have absorption. Let's assume that here we have the battle going on, but we never have this counter aggression by sellers. So we can't say yet that buyers have been absorbed. Why can't we say that? Because during absorption, or at least whilst absorption is still going on, we could also have a temporary battle of aggressive buyers buying and passive sellers selling, leading in aggressive buying being even stronger than passive sellers, or ending up being more stronger than passive seller. But that happens after a while they are having the fight. This happens, of course, because, as we said, aggressive buying, we're looking for liquidity. When it comes in this area where passive sellers start to step in, they have found some liquidity, but maybe it just wasn't enough. Aggressive buyers use all of this liquidity, but there are lots of more people willing to buy compared to those willing to sell, that that liquidity given by passive sellers isn't just enough to the aggressiveness expressed by buyers. And in that case, that's why we shouldn't really say that until we don't have a clear definition of who have won the battle, we can't really say who has been absorbed and how. In this case, if such a dynamic would happen, we will see the area being broken through and a strong aggressiveness by buyers keeping on moving the price up. In this case, can we say that we had an absorption here? Well, of course, we can say that, because we have a clear indication of who won the battle. But it was just buyers winning that battle. So that's the main reason why absorption is the most important dynamic to understand in order to grasp the most important order flow concepts and principles. But we should look at absorption areas as double side trades. Okay, so we always have a strong interaction and participation by both sides, buyers and sellers. Of course, since there are both participants being very active, we will tend to have high volume on those areas. But in order to determine that an absorption has come to an end with a winner, we always need to look at the next acceleration after that area of absorption. So basically, from the price action perspective, we always need to wait for price to get away from that area. Only starting, keeping on moving away from that area quite quickly, accelerating off that area. Only in that case, we can determine quite accurately that was an absorption. The failed, the counterpart losing that fight was the part that was absorbed. So, how can we spot absorption? Well, based on that knowledge, today, last time I quickly introduced that using cumulative delta. Tonight I have gone a little bit more deeper into the process, the dynamics, why absorption forms and creates. And in fact, how can we determine absorption? Well, still using cumulative volume delta. For example, we can see, going back into price, I want to look for a very clear example. No clear example yet. Yeah, that's perfect. That's perfect. So let's compare this situation of price action with cumulative volume delta. We have this low, which corresponds to this low by cumulative volume delta. That means that when price made this low here, the cumulative delta for the day was plus 13K. Good. Then price starts chopping around a little bit, making a small range, and then it tries to break down this low. Now, according to the price action analysis, that wasn't really a break. There wasn't a proper break out of the level. It looks more like a fake out. Okay, we can see that price only could go just a few ticks lower than the previous low. But compared to the previous low, look how much volume has been developing to the downside, basically leading to what? To no result at all compared to the effort it had done. That's a very nice divergence in CVD showing absorption. Now, what is important about that is that absorption, for all of these reasons, it represents one of the most solid support and resistance areas you can identify from the order flow perspective. Because if you think about that, if you have lots of volume trying to push and break a level, but despite all of that volume, price doesn't make it to go through, that means that there had to be like a wall, the very same size of all of this volume trying to break down here. There had to be a wall of, in this case, passive buyers trying to defend the area that creates a support, or on another view, that's the evidence of lots of passive buyers being here, lots of liquidity being there, buying liquidity being there, trying to defend the area because they want to buy. So for sellers, that means having their life more difficult to go down. This is the reason why absorption normally creates what is a support or a resistance if you look at that from the order flow perspective. Very same, in fact, just for instance, how can you use this situation? Well, there are many ways. It depends a lot by the tool, the order flow tool you're using. But for example, here, if you look at that, yeah, they're still trying to break through the level, but we know that there is a support here given by this, let's say, candles. Okay. So that means that basically, you can either decide to use this situation immediately to take an action if you are maybe already in a trade, or if in this situation you want to use this situation to decide how to make a setup in the direction of the absorption. There is a problem though with absorption, because it will very strongly represent a point of support or a resistance. In fact, as you can see here, well, price, yeah, tries to push even lower, but it always struggles a lot to find a proper acceptance below. Okay, so it definitely works as a point of support or resistance, but what's the issue with absorption? That considering that we still have lots of aggressive buyers or sellers trainer hit that level, aggressiveness is still in play. So they are really motivated, even if they were absorbed. That's clearly an area where lots of sellers or buyers are still they were very active, so they were they had a lot of conviction of bringing price higher or lower, depending if we are talking about aggressive buyers or sellers. So that's a support, yeah. But how can I be a little bit more confident on assessing that situation and maybe looking that this aggressiveness at a certain stage is weaker with exhaustion? Looking at exhaustion, which is another order flow events leading to rejection, so leading to possible reversals of price, but it works on the opposite principle of absorption. We have price reacting on inflection points on absorption where we have high volume not going up, for example. So as we said, despite lots of buying right here, price just doesn't go up because buyers were absorbed. Fair enough. When, on the other hand, exhaustion occurs, we have price just not accepting the level because there are just no more buyers being interested to buy. That's it. So maybe during the move we have a strong volume, strong delta. As price reaches a specific level, we just don't see any buyers, or at least way less buyers than we used to have during the move, during the main move. So basically, during exhaustion, with exhaustion, we have a way more straightforward dynamic. Price doesn't go up just because there are no more buyers buying. Okay, quite easy and simple, even easier to understand compared to absorption, where it might sound counterintuitive. Price doesn't go up, even though I have lots of people buying. Exhaustion, we just have price bouncing off a level because there are no more buyers buying or more sellers selling. But the thing is that the exhaustion, for this reason, doesn't express itself. It doesn't build itself an area of support and resistance, and it shouldn't be considered as such at all. Why? Because I just don't have a wall, a protect. If I want to use exhaustion to trade short this area, I don't have a price building a wall given by volume as well as absorption. That means that if for any reason price comes back here and buyers which weren't that much convicted to buy at the previous touch of the area, now they might want to step in stronger. And since we don't have any volume being transacted here, because apparently there weren't so many passive sellers as well here, considering that price was moving on low volume. Exhaustion always comes with low volume, as opposed as absorption coming with high volume. That means that if buyers comes back stepping in, we don't have any wall here to break through. So that's the reason why exhaustion can't be considered as a proper support or a resistance. There is only one way when exhaustion can be a very interesting order flow event to be considered also quite powerful, as well as absorption. When after an exhaustion on one side, we start to see aggression on the other side, coming almost immediately after we have spotted exhaustion of the buyers in this case. If exhaustion is followed by aggression on the other side, we are going to call that from now on initiative move. Then that's a good confirmation of buyers being actually quite weak. And even then, even though this exhaustion here at the top, it doesn't really protect price from bouncing back up. In this case, we have a resistance, in this case, given by both order flow event, an exhaustion here at the top and an initiative move coming in the opposite side straight away after that exhaustion. Why do I call that move as an initiative move? Because that's the very same move I was talking about earlier, where making the example of absorption. Prior to absorption, we normally have price reaching the level where liquidity is found, seeking for liquidity, actually, right? Every move seeking for liquidity normally is driven by initiative. That means that buyers or sellers are initiating a move to a specific side of market, seeking specifically for liquidity. Okay, that means that there is no liquidity, no counter liquidity in that area being available and willing to absorb all of that aggressive orders coming in. So if during an exhaustion we see the initiative move coming in the other way, that would confirm, first of all, that buyers are not interested in buying neither aggressively nor passively this area. Otherwise, we wouldn't have sellers being able to initiate the momentum move to the other side, to the other side. But there is another situation where we have those two order flow events ideally interacting very well each other, and that's when we have absorption first, which creates, as we said, a support. like in this example. Then price starts to build some initiative in the other side. So we can determine, oh, okay, cool, that was an absorption. That was a proper absorption where buyers were absorbed. So that can also be considered as a resistance point from now on. And then when price, if price comes back and pull back the area, that gets confirmed by an exhaustion following a previous absorption. In this case, why this combination is particularly good when we look at the order flow, because here I have the creation of the support. Here I have not only the confirmation that that support or a resistance has held in terms of price reaction, but also a further confirmation that that area was good, because if I can spot exhaustion here, that means that here buyers weren't able to go up despite the number of energy they have spent here. Here, if price is exhausted, they're not even trying yet, and they aren't even, sorry, they aren't even trying anymore to push price higher. And if that initiative to the other side occurs, that's the final step. Sellers have won the battle. Now, in the next webinar, we're gonna look at these order flow events looking at the footprint chart, because yeah, we can spot absorption and exhaustion by cumulative delta. That's a very good tool to look at those dynamics. And more specifically, we have, as opposed to absorption, where we had here lots of effort, no result. That's absorption. According to what we said here, we have exhaustion, which can be spotted from the CVD in situations like this, where we had not that great. Yeah, this one. A top in price, top in CVD, a new attempt on breaking higher with way less energy to the upside. So basically, that's just the opposite dynamic, because of course that's a weakness expressed by a different order flow events. Basically, we can call exhaustion as a lack of participation. Here we can clearly detect a lack of participation, but in this new high. But then, as you can see, we have also the move to the downside being strongly initiated here. Initiative moves normally create very good convergence between cumulative volume delta and price candles. Divergences, either with huge effort or no effort at all, they respectively give us the evidence of absorption or exhaustion. Next time, next week, we're gonna determine, we're gonna, of course, first of all, explain what order flow main tool footprint chart is, and we can read some information, and also how to spot absorption, exhaustion, and initiative moves looking from a footprint chart, which is something looking like this. Something like that. Okay, any of these bar will give us, next time we'll see how to determine which bar shows absorption, which one exhaustion, and which one initiative moves. But from now on, already tonight, before we end the webinar, I want to show you a very nice tool from the Volumetrica platform, the Volsys platform, which is the one you are looking at right now. A very nice tool detecting absorption and pressure areas, actually, that means initiative areas, in an algorithmic way. That means just doing some mathematical calculations in ask volume versus bid volume being traded, and identifying some levels where previous absorption or previous initiative moves, accelerations, took place. An example of that is given by those lines you can see here. Let's make this chart bigger. As you can see, there are several pink and purple or blue lines with different color shading. Some of those are just ordinary lines. Some other are dashed lines, like those. Okay. Continuous lines would normally express pressure. In fact, as you can see, this continuous line here comes with a little p here in the background. P stands for pressure, which is basically the initiative move. That means that here, according to the calculation that the indicator makes, we had a strong initiative, a strong move to the downside with lots of selling pressure being initiated at that level where the line started to appear. That means comparing that with the price axis. Let me just erase something here. This line shows here when the cursor is in this candle, makes this candle. So that means that the overall sum of at least two previous candles has created in the calculation between this aggressive selling volume and the aggressive buying volume has given a pressure to the downside. And the line shows indicating that from here on a down move with such an acceleration was initiated. Those lines would represent an amazing inflection point for when price comes back on those areas. Also here, even though here we had a little break of the eye, but normally, as a rule of thumb, I would say that the first pullback is always the best. Of course, because the area is still fresh. Sometimes also the second pullback, but as a rule of thumb, I would say for everything, for every inflection, as a personal suggestion, for every level you might want to be watching throughout the session, the first pullback is always the best one. If the first pullback is gone and that level you are considering is not fresh anymore, I wouldn't consider it anymore after the first touch on the first pullback. It just loses its importance. So in this case, the purple color coding would express sellers. Okay, so as well as blue color coding would express buying. In this case, in fact, we have still two continuous lines, both blue, even with different shadings, that would express the very same thing. Buying pressure, which have started from somewhere here in the past. Yeah, exactly on two different levels right here. Dark blue is a little bit higher than the light blue one, which is a little bit lower. Those can be both considered when price in the future might come and pull back those areas. Those can be considered as an area for where it could be a nice idea looking for a long trade, because previously we had the order flow here giving a long indication, coming with the evidence of a pressure to the upside. Let's come to dashed lines now. Dashed lines would show absorptions. So, in fact, they all come with a small a here, which stands for absorption. Now, we have here an absorption pink line. That means that since the color coding, as we said, the pink line represents sellers, and being that an absorption line, that means that's a point in the market where we had absorption of sellers. So that means that sellers somewhere here, still at least 2 bars before the line forms, have been trying to push price lower, but actually, despite their relevant effort, they failed, and price went all the way up. This line can be considered on a pullback as a possible inflection point where another absorption is likely to happen. Still, exactly as well as I promised that wasn't done on purpose, but as well as in the previous example, first pullback, great, second pullback, good, third pullback, the level gets broken through. This is just a coincidence, of course, but maybe not completely. The interesting thing about this, and also here we had a minor line of absorption of buyers in this case, which in this specific situation didn't go exactly as planned. But we had the indication anyway given by this. We have another indication of absorption of buyers here. So that can be considered as a place where to look for a bounce to the downside of price on the pullback. As well as here we had the pressure of sellers, because that's a continuous line. The first pullback respected the area greatly. That's a very interesting tool provided by the Volsys platform, which is called Vol Analyzer, which comes with other interesting functions. We are gonna talk about in the next webinars. But from the perspective of what we have been talking about tonight, that's an amazing tool in order to detect and have a clear show up of where the major absorption and pressure have been taking place. Of course, this indicator comes also with some adjustments you can do. The indicator here, that's called vol signal. The feature is absorption or pressure. You can also decide if you want to set it in the weak, medium, or strong mode, both for absorption and for pressure as well. In this case, the first mode regards absorption and the second one regards the pressure. In my case, I've decided to set them both strong and conservative rather than aggressive and medium. And you can do that in also multiple charts. In fact, why do they come with different color shading? Well, because I have set them in two different charts, 30 range and 60 range. The darker one, so dark pink and dark blue, come from the 60 range. The light blue and light pink come from the 30 range. And you have also the ability to overlay the indication from the higher time frame into the lower time frame, exactly as I did here. This blue line you can see here, that's just the copy and paste of this line which arises from the 60 range. There are some questions. Hi Luigi, if you ever got a question, you can write it down on the chat. Meanwhile, I'm going to answer to another question I had on the chat previously. How can we use this information to our advantage in real time then? Well, I guess that since that was sorry for replying too late. I just noticed your question only only now. Um, Basically, in terms of absorption and exhaustion, We can use that information both if we want to take a trade bet, because we can use that, of course, as we said, if we have an absorption on an important inflection point. If we have an absorption, we already have a first confirmation that that inflection point is quite good, because order flow is confirming our hypothesis given from the main analysis. It then, of course, depends how aggressive you want to be in your trade, because of course you might want to enter a trade based on absorption only. But if that absorption is followed by another pullback showing an exhaustion, you definitely have a further confirmation on that single order flow event. It can also be a confirmation of maybe a specific price action tools you maybe are using. I'm just figuring out. Let's assume that maybe you are trading, just to make a very simple example. Maybe you're in your trading plan, you're using engulfing bars. Okay, so maybe you have a situation like that. An up bar hitting a level, the next bar completely engulfs the previous bar and close down here. If here at the top, in your pattern that you might already use in your trading, if at the top of this pattern you spot absorption or exhaustion with then some initiative move to the downside taking place within the candle, of course that's a confirmation of a trade you might want to take anyway, because of the price action pattern it has created. Order flow events are normally better used as confirmations of other structural analysis you might already taken. That could be an example. With footprint, talking about footprint next week, we can have maybe even more example to be made according to that. Okay, I guess that's the only question there was. Yeah, sorry, I'm just checking the chat. Yeah, I guess there was no other question asked. Okay, guys, I hope you enjoyed the webinar tonight. Next time, we're gonna go even deeper into that, talking about footprint chart, and with that, we will have completed the first order flow section, because this is only the analysis in terms of order flow of the aggressive orders. There is another section which will be go on in the month of November, given by the analysis of passive orders. That means liquidity. So we are at a good stage right now, I would like to say. You're welcome. You're welcome. I hope you enjoyed the webinar, and see you next week at same time with these new topics. Thanks again for participating, and see you next week. Cheers. Bye bye.